have two attempts to go to drop. You have the red bar ignored at 9:45. It turned into a breakout failure.
It moved enough to we'd have made money on it though, right?
You would have made enough money on it because I would have. I didn't take the breakout.
Yeah.
But because I was trying to count how many breakdown failures I had, I was like 1, 2, 3, and then it just took off because those two bars came one after the other one. Because you had the 922, 934, and the red bar ignored at 9:45. So I then wrote on it, if it comes back, then it's a breakout failure. And then it came back.
Yeah.
So I actually took it short at 10:17. There was a shock bar at 10:12, which I didn't take that shock bar. And then it attempted to retrace, and it did. Then we had a red bar at 10:16, and then the 10:17 bar I took short, and I took it at 89. And I actually wrote this one some because I'm not a really good writer. So my writing is it's like skateboards, I keep falling all the time. But I took some around actually I took some at 74 when on that red bar. Oh, another thing I wanted to mention to you guys, and I was trying to figure out today because Neil had mentioned this, and I don't think it ever clicked until today. The volume bar. Remember the breakout bar that we talked about after the bullish consolidation? If you look at the volume on that bar, and I'm looking at a 1 minute bar.
Guys, can you see my charts up?
Yeah.
Okay, I've been marking these off, Jose, as you've been talking, so just keep going. And
so you have that a 1 minute bar that with volume, which led me to believe that it wasn't going to go anywhere after that because of so much volume coming in, and then it started to come back. So same thing happened at this bar. You guys see this one?
Yeah.
Same thing. And then as you went on, you saw it again a couple more times when either on the negative, a red volume bar, or on a green bar, when that bar was formed with this volume, generally what it did was it just paused. That was almost the high for that bar. And one of the things that I was going to ask Neil, obviously that's not a sign to short, but certainly is a sign to get out. And look at, if you go forward on the other bullish consolidation that we looked at,
if you feel fat, usually fat.
Actually, it's a little forward than that. I think it's,
should be right there.
Actually, right there. If you look at this bar, what do you get? You get a pause.
Yeah. No, this not.
So after every single one of those green bars, it either showed a top or a bullish consolidation came, or at least a pause came right after that.
Okay. Jose, let me make a comment here. Because actually, what you're seeing today is a bit of an anomaly in that. Now, I don't really disagree. We move the chart back with this one. I don't really disagree, perhaps, that the volume here could basically end this move. But this one over here, guys, and I have to tell you, that's why I really, really hate trading in this environment. This bar here, and as you say, there was great volume with it. And this is a 2 minute, but this is going to look, almost identical on the one. So, guys, you don't normally see, after you come into a bottom, you see some consolidation like this. There's a little bit of void up here, but it isn't significant. It isn't overcomable if this had to mind the move. What you're seeing with this volume bar and no follow through is just poor market conditions. Because again, guys, the rule, remember, the rule is volume ignites a move and volume ends a move. And I find that to be still true the vast majority of the time. Now today, that's not the case. And certainly as you see this starting happening, it would certainly be a caution or something to be aware of, as Jose, as you've done it. But I actually normally, guys, I wouldn't count this as a move ending, even though today we haven't gotten follow through on these volume bars. I wouldn't put that into one of the criterias that when you see it happen, here's a volume bar again. I would say you're right. Today it's been a little bit unique. A volume bar that gets this thing going and then it consolidates. Again, that's not traditionally how these things will form. We'll normally see a little more follow through, particularly here where we're basing. And on a shock bar like this, if when you get volume like that perks up, you just don't normally get a no follow through to it, and in this environment at least. And I credit that to just being terrible market conditions and only 7 guys trading, and so I think that's largely what's going on right now. But so keep going, Jose. You're doing a great job.
Thanks. The other thing was the bottom actually was here.
You want a different chart? I can get you a 5 upper.
No, actually the one. I was using the one.
Let me get you a 1. And I'll go get you a 1 real quick. Here's our bottom. Let me put an arrow on it so I can come back and find it. There's your 1.
You also saw on the one that the bottom, you had it, although it wasn't as much, it certainly spiked up the volume aspect of it. And obviously what it did to me, what it looks like, it's a shakeout.
It is.
But this was the only time, actually, during the day that any of the resistance actually was overcome.
It's true.
So,
hey guys, I'm gonna step away just 1 second, take a phone call. You guys keep going.
and if you think that it went from 133.15 to 50 and back to 33, it had a pretty good ride if you were able to take all of them. Any of you guys follow the euro today?
No.
Just a little. Is that all you trade for day? Is the euro?
I try, yeah. I mean, I'll take trades here or there on other contracts, but I'm trying to see if I could master this euro thing. I'm trying to concentrate on just on one. Sometimes the setups happen so quickly that, when you only have 2 eyes and 7 markets to look at. So you could spend half a day or 2 hours waiting for a setup, and then all of a sudden something takes you away from it. So I'm trying to just concentrate on one. And I also find that it moves a lot more than the other markets at this point.
Okay, guys, I'm back. It does, Jose. I agree. I like it. I like the euro. I like oil for that very reason. I keep the commodities up as well. Again, for those very same reasons that you can find trades there that sometimes you can't get. These darn minis just are no fun when they get like this. And I completely agree. Completely agree. Okay, guys, let's go. Let's jump into a lesson. The reason being is Dave wants to take off before we get too late, and then we can spend a minute and let's kill the lesson. And because we're going to spend a few minutes with this one, this will take us a little bit of time, and then we can come back and talk about some setups and various things that go on throughout the day or what's happened here. Now, guys, however you set your line, your charts up is absolutely fine. I'll show you how I have mine set up. And this information is just stuff that helps me see what I want to see. And because you guys play with your charts and your settings and how you like to see it, guys, there's no magic. I have no magic pill here or anything else. Some of it may really even seem foolish to you compared to how you guys do it, and that's okay. Just the concepts we're going to focus with. Here's what the internals that I like to watch. The 5 of them here are the tick, and I actually use a line chart up here. And frankly, I don't refer to this line chart a great deal. The very top one, guys, can you see that okay in the window?
Yeah.
Yes.
Okay. I'll just pull it in here just real quick. Wrong one. There we go. I use this line chart, but candidly, you know, guys, that I use my tick chart over here. Oh, wrong chart. Sorry, guys. I use my tick chart here on my price charts far more than I do the line chart. I keep it up there, and I'm kind of watching trend and all, but I glance up there from time to time, but I'm really going to spend most of my time watching these ticks, as you guys know, here at the bottom. And let me go through all of them collectively, then we'll come back and talk about them somewhat individually. The next one is my ADD, and guys, this one is only thing I'm really watching here is it building? Is it continue to build? So, for example, from 10 o'clock, and this is a 5-minute chart, and I find a 5-minute is fine for what I want to see. I'm just looking, is it trending? And then I ask myself, let me go flip this over to an actual E-mini. Let's pick the ES because we can. And what I'm looking for is the R, I don't know what the proper English is, are the E-minis building, are acting similar. So if I could look at this, and basically 10 o'clock, 8 o'clock, well, I'm Eastern time, so yeah, that's our low point. And then we actually come back down here at the 10 o'clock hour. You can see there's a blue line on the bottom of the ADD line. As I move my cursor, you'll see a little blue crosshair on my ADD that lines up with the same time as the price chart. And one of the things I look for here is I look for divergences here as well as my ticks. And as price on the euro, particularly on the ES and the YM, the advanced decline line is diverging from price. You guys see that?
No.
And I'm looking at there. Can I do a line? I wonder if I can do a line on here. remove that line. Oh, it's probably a red line. That's why we didn't see it. There, let's try this. So there, we've got a divergence here, and yet we don't have a divergence here. So that's what I'm looking at. And I watch for those indications, okay? Now, with respect to the advanced decline line, this one is the most sensitive. And guys, I'll tell you this chart, if any of you recognize it, I've got blue and green, or red and green on it. And this is a script, a custom script that Greg Capra built that changes the body of this color based upon slope, and if we're above the zero line, etc. So when we see the upper half of this green, basically it's positive. It's in a positive condition. Anymore, guys, I really don't pay any attention to whether this is green or red, or it's been so long since that's why you see them this color, but I really don't pay any attention to the colors, and I just leave the script on there because it's been on there forever. Just a line itself is all you really need, and any of your charting platforms will have those. And this just gives me an indication: is there market strength building that I'm not seeing in price, or is there market weakness behind the scenes that I'm not seeing in price? That helps me get a bias as to whether support will hold or resistance will hold, or if breakdown failure is of significance. It helps me to get a bias. Now, the only thing that I'll tell you about the ADD, guys, is that when it gets, there's a couple of things that I'll share that with you when I get down to the up-down volume. This one is, as I say, is the most sensitive, and you usually don't see many divergences. This one had a little bit of a divergence today, and I wouldn't trade off of that divergence unless I was seeing something else. So, for example, if I come back and look at ES, and let's go back and look at a 15 just to get time in. And we're not seeing it on a 15. Let me go look at a 60. And yes, now, and what I wanted to tell you is that divergence becomes more important to me at support areas. So we're at a support area. So knowing, and again, guys, I haven't been in today at my charts to look at anything, so I haven't drawn any lines in anything. I haven't seen what the markets are doing. I'm kind of catching this cold. But I draw that line just to point it out to you. How often we come down. And I've mentioned this to you before, guys. Prestine teaches us that effectively this pivot is of really no value, right? You guys know that, right? You've heard that.
Right.
And why is it of no value?
It's been dealt with a lot
below the mode.
Correct. And I'll tell you that's not true. Because the more, and you guys can determine whether you believe it's true or not. I don't believe it's true. Because as you go back and study charts, you will find, and particularly with euro and particularly with gas or oil, and even with these E-minis, you will find that these pivot areas, and if what Prestine tells us is 100% accurate, then we are to assume that this is the only reference or the only congestion area that prices chose to bounce from. If that's the case, then this is a pretty weak set of support. There is a gap here. No, there's not. There's not a gap here. Sorry. So this is a pretty weak argument that this is significant support. But this pivot area still has influence. And I know we traded below it and we traded above it. Therefore, under Prestine's definition, it no longer becomes important. But I don't believe that. And I find too often that these consolidation tops and bottoms will be of significance, because I don't buy this little congestion area right over here as being very significant. I still think this weighs on the reason that this stopped where it did. you guys make up, I think, your own conclusion on that. That's my opinion. But with the support, back to the lesson. Sorry, guys, I digress. But with the support being over here as it is, then this divergence that we saw before becomes more significant to me. And it makes me want to pick up and look. Now, will I trade off of it? I don't know. But I do want to know that it exists. It helps me make a decision whether I want to trade off of it or not. These divergences are really quite powerful, and we're going to walk through. That's what our lessons are going to be on. This whole thing today is these internals, and when we get divergences, what can we do to take advantage of that we wouldn't otherwise, we wouldn't act this way in other circumstances. The Trin. In fact, I have, guys, this is just, do you guys all know what the Trin is? Do I need to go in the explanation of the Trin? I will if you want me to.
I'm good with it.
Yeah, I know.
Okay. I won't if you don't, I mean, if you guys, okay, if you guys all know what it is, I don't want to go into the explanation.
Yeah.
The Trin, the Trin I find, I don't really pay attention to this in terms of divergences and things like that. The only thing I really watch is where is it at in relation to the day. And really under one, the Trin with up-down volume and advancing volume, declining volume, the shares going up, the shares going down, all that kind of stuff. This is a combination of the ADD and up-down volume. So all I'm looking for is it bullish under one or is it bearish over one? And is it trending? The actual number, I don't really care if it's 120 or 110 or 100 or 130. I really don't care too much where that number is. In this condition, and you know it's an inverse indicator, it's actually working its way lower. And prices during this period were working their way higher, which is what you would expect. When this thing, and it's true with all of these oscillators, and all of these indicators, I should say, is when they get moving back and forth, such as this, we came all the way down to 80, which is kind of bullish. And we've been as high as 120, which is rather bearish. When we see those big extremes, then it shows us that there's very little commitment directionally in the market, and we could expect to have a little more whip going on during the day, as long as we see those kinds of inconsistencies. All I really want to see is it trending, and I want to see the actual number to determine how bearish or how bullish is it. If we're down here in the 0.50 or 0.60, 0.70, guys, that's a pretty strong day, a pretty bullish day, and I'm not really expecting much of a turn in the trend that day. Now it could happen, but my anticipation is I'm not, and I'll show you how this relates. I'm not looking for a counter trend trade so much. This is going to tell me I want to be trading this thing with the trend long when this gets down here in that below 0.80 is rather bullish. Now on the upside, guys, above about 150 is rather bearish, and you don't normally see days get turned around too much when you get too negative on this trend. Now, in the old days, and I'm going to go change this. The old days, we would usually see once a trend would get up above about 2.5, up into the 3, and it's happened a few times up in here. It's got to be above 2, really, and really the markets have been pretty quiet, here in the fall. They really have. The VIX has been very low. This thing has not been too wild. But once we get plus 250, 3.30 or 3.0, certainly up in 4.0, you go back and look at these on the days that they spiked to this high. And if they held through the day, Now, if it's a one-day event or just, for a 30-minute period and comes right back in, forget it. But if it actually holds these levels, anything above 2.0 and up, guys, you can pretty much guarantee that you're going to have a gap up in the morning. Now, when we get a 2.0 or better, we're dealing with a very negative day. And for whatever reason, I think it just gets a little bit too negative, a little too exhausted, and you normally get a gap up. Now, it doesn't mean that the gap won't fail, but it's rare that we don't get a gap up. Now, and one of the things that I've actually done before is I've actually bought at the close when I get an extreme that's an extreme trend reading. Or if I've got positions and I don't hold E-minis over very darn often, I will be looking for a gap up in the morning to potentially fade or however I feel about it. But what I find is that those are pretty extreme numbers on the upside. I don't see it working on the bottom. So when we get down to 0.40, which I've seen from time to time, I don't see it necessarily gap down the next day. It doesn't work like that. But it does on the upside. So +2, 2.5, 3, and even if you get higher than that, there's a rare, occasionally, we'll see this thing, spike way up. This 12, I'm not sure that was a true reading. That could have been a bad tick on the day. I have seen them up in the 5 and 6 range. And those days, if you go back and look and play with your charts, you'll find that we gapped up the next morning. And even though that's not really important for trading, it may at least weigh in on how you might think about what you're doing if you're holding stuff overnight. Okay, the next one you guys know about, obviously, and you probably all watch these, is I watch the VIX. Now, the VIX to me is, again, one of those things I want to see as a trending. The absolute number isn't important, be it 17 or 19 or 20, and it doesn't make any difference. Is it trending? You take a day like yesterday, and it was trending all day long. And the markets didn't go very far yesterday, but in a normal day, when you get this thing trending as it is, that's what we're looking for. Again, you add all these parts of the pie together, and you ask yourself, what are the internals telling me? Are they strengthening? Are they weakening? What am I seeing? Is there something going on in price that is not consistent with internals? You guys all have a copy of my trading plan. Second page, when we actually get into trading, is after we evaluate, what is the trend, etc., yada yada. One of the things that we immediately ask is, do the internals confirm our belief, whether we're long or short? And for the most part, I want the internals to confirm that belief. I want to be trading on the same side as these internals. Now, again, that's for the most part. And there'll be times when I'll certainly trade against them. But I want to know the wind is at my back. And that's what gives me the confidence to take breakdown failures, to take double bottoms, to take those things if we have those internals that are complementary, because, guys, they will win. They're just one more clue to the puzzle on what's going on. And today, for example, yeah, Jose.
At what point are we relying on the internals being that, when the market opens, those internals may not
Right.
react?
It takes an hour and a half for them to become really valid to me. It really does. We may see you will, if you gap up on a very strong day, you'll see that advanced decline line, or that, the ADD, that thing would be up at, you've seen it up when it's plus 2,000, and it just doesn't budge all day. Guys, just never short those days. When we get an advanced decline line that's above 2,000, just don't ever short it. I don't care what the setup is. I've just never found any of those things to work. The best you can do is take little breakdown failures and stay with those internals. But it takes a couple of hours for them to become meaningful, Jose. Now, let's go to my favorite. And I don't know why more discussion isn't had on up-down volume. This actually, to me, is the gas pedal or the throttle to the market. And what you're seeing is the volume on the the up-down volume on the NYSE in the yellow line. In the tan line, you're seeing the up-down volume on the NASDAQ. Now, I don't pay a lot of attention to the NASDAQ other than is it trending with the NYSE? And normally it is. Normally they stay pretty much together like they are today. There is a clue when I see one of them just go off the reservation entirely and just go nuts. It makes me pause. And when I see that, then I'm not seeing consistency in the market. And it gives me pause with relation to, do I really want this trade? And it, frankly, guys, it lowers the odds that the trade is going to work. Now, it doesn't mean it won't work. It just lowers our odds. So in a perfect world, what we want to see is we want to see a smooth, and I'm going to show you, we're going to want to see a fairly smooth, like this one. I'd have to go back and look. But this is relatively smooth. It's not perfect, but it's not bad. And when we get a trending up-down volume line, this thing is building, right, basically from the get-go. And it's working through the whole day. It just worked higher and higher, and there's a small pullback during the 2 o'clock hour, and it just continued to work higher and higher. Days like this are quite indicative of what's going on with the internal. Well, they are indicative of the internals, and you kind of want to stay on the side of this. I'm reluctant to short when I see. That doesn't mean you can't do it, but you got to have just the perfect setup. When I see this thing trending this way, I'm not near as excited about shorting, because I know that I don't have the wind at my back. Now, you get into a day like this, and now this is a day prior. Look how much different this is. It's up, it's down, it's up, it's down, it's up, it's down. This is a day without so much commitment. Now, this is a day that you can play shorts and you can play longs. You can play your patterns a little bit better, because this up-down volume is true in that this is reading the volume on shares rising, on shares falling. And when we see it quite jagged, and we see it meandering, and we see it erratic like this, again, it's a picture of no confirmation. There is no consolidated or collective thought or strength to the market, and it's okay to be taking shorts and longs. Now, whether you want to scalp the market that way or not, what I do, guys, and this is the biggest thing I use this for in an environment like this, when I see this thing being this crazy, I tend to cover my positions quicker. I won't I won't trade pivots on a day like this. When I'm seeing up-down volume acting the way this is, I don't trade pivots. If I'm going to leave a position on, I'm not going to leave it on a pivot when I haven't got commitment. Now, you get a trend day where this thing gets nice and smooth, and I'm going to show you some charts. I don't have a problem. I don't have a problem trading a pivot in that environment, but not when it becomes erratic. Now, next thing I want you to do, look at the two lines I have here. Plus 100 is green, minus 100 is red. Anything under in that band, and the zero line's in the middle, anything in that band is a neutral, nondescript day. The internals, I don't, even if they're trending inside that range, I don't really care. That's just not significant. That's a very neutral day. Mildly bullish is plus 100. Mildly bearish is plus or negative minus 100,000. And up until then, it's neutral. So those are some parameters that I find. So really, guys, on a trend, I mean, if I'm seeing this thing trending today, I'm thinking, I don't care. It's in the neutral zone, and I'll play the chart as I see it. I don't really have wind at my back, even though it's not much of a trend, actually. I mean, it is moving up, but the range is just so small. There's just not much going on today. And I'll show you another chart that's not true, that you get a little bit better action in this. But in a day like that, I will tend to play my bars and my support resistance areas a little tighter, because we just don't have any wind at our backs here. Nothing's going on. Now, now this is a number that you guys write this down. By the time lunch hits, if we are negative 500,000, actually 400,000, tends to be pretty darn good. If we're negative 400,000 at lunch, it is very, very unlikely the market is going to recover that day. Now, it will make attempts to bounce back up, but it should only bounce up into areas of resistance and then roll back over again. That's quite negative, and occasionally the markets will recover and go back to positive or end up green on the day. And that's what I mean is by recover. I mean for them to pare their losses and get back to even or better. It just doesn't happen very much. So I'm anticipating when I see a number of negative 400,000 or more during lunch, it's not. My immediate assumption is we're probably not going to see a turnaround day. This is going to continue to work lower through the day, and then I'm looking at shorts, and I don't want to trade longs. And again, guys, by the time we get into lunch, if you've got a plus 500,000 or really a plus 400,000 or a negative 400,000, just don't short the market or don't take the market long against that number. That's the only absolute numbers I really live by on this up-down volume. Is I'm not going to try to short a market when at lunch I'm sitting at 400,000 or 500,000 on my up-down volume. Just too strong of a day. All you're going to get is you're going to get taken out. It'll break down. You'll get the break. You'll get breakout failures. It'll pop down for a couple of bars, and then they're going to come back in on you. So, as a pretty hard fast rule, I don't short days that are plus 400,000 or 500,000 at noon. Same as negative days. When we get 400,000 or 500,000, 400 is really my threshold. Is I'm not going to be looking to go long a trade on a $400,000 or 400,000 negative day if it hits by noon. If it hits sometime later in the day, I don't have a problem with that. But what happens is this is cumulative. So every day we start out at zero on up-down volume. And this is a cumulative. So if it's that negative that we can accumulate that much negative volume by lunch, it's not going to get fixed. It's just rare. Now there are a couple of days where it does get turned around. But usually you find that after a long time the market's been down, or if we're into some super major support on a daily like a 50 or a 200 moving average or into a pivot from a prior day's area or something that provides significant support, then sometimes they get turned around. But if the daily has void and whatnot, it ain't going to happen. You can just stay with the trend, and when you see that number on your up-down volume, just don't short those days, or don't go against that. That's what I'm saying. All right.
Can I ask a question?
Please, anytime, guys, jump in.
Would some kind of climactic move, like, let's say YM drops 100 points in an hour into 1230, like would that? Yeah. That would be a reason.
It would be.
Yeah. Okay.
Yeah, it would be absolutely. That would be a reason to take it for a scalp, and then just ride some of it and see what you get. When we get into the oil days or oil trading, I've got some general biases on those events, and I'm going to show you how to play them and how to deal with them. and they're absolutely. You just don't see them in the E-minis like we used to. If you either traded for a few years, we used to get climatic buys and sells more frequently than we do now. I haven't played a climatic buy or sell on the E-minis for I don't know how darn long. But I can do it on 6E, and I can do it on oil almost weekly, and on oil every weekly, at least, maybe even sometimes a couple of times a week. So we just don't see them on the E-minis like we used to. I wish that weren't the case. All right, now let me show you how the divergences work. And I watch this, guys. I watch this like a hawk. And let me pull this chart up. Okay. Now, this is not untypical. And guys, I tell you what, I would short the heck out of this trade right here. Being into the gap and with everything that's going on, this is the one time that I say I don't really care if that I've taken out these prior pivots. So as I look at this 5-minute chart, I think it's a 5. No, it looks like a 2. Regardless, as I take out these pivots, you guys know the definition, and this is now turned into an uptrend. By the time we get down to the right side of this chart, this has turned into an uptrend. Clearly, we've got a little double bottom, a little breakdown failure. We've got a higher low. We've got a second higher low. We've taken out our little M or our W, the middle of our W. We've taken out the prior pivot from our lowest low. This, by definition, has changed trends, and therefore we're looking for pullbacks into support, into this really into the 710, 700 or 710 to 700 area to be buying this thing. Not today. This is one of those ones that I will short with vigor if I get a short setup, and here's the reason. I'm going to show you another chart that's even a little more significant than that. This is our up-down volume, and the very fact that we gapped down, and this was a fairly substantial gap down. This was 40. This is an 80 tick gap down on the YM. This is a fairly significant gap. Typically, if we have not, this is lunch. If we have not closed the gap in the first couple hours, we ain't gonna close the gap in the first. The gap usually won't get filled. Now that's not 100% true, but it's mostly true. And so this thing really had very little. As you look at this thing, it finally mustered up enough strength to close the gap later in the morning. But the important part, guys, is this up-down volume just continued to bleed lower. Now we got a small tick up right here, but nothing like what price should have measured. So as a comparable, let me show you this. I don't know what it's going to look like, so this may work and it may not work. Let's go ahead and look at this and do this. And let's put our up-down volume on today. There's our up-down. It's a 60. I got to go to it. Let's go to a 2-minute. I bet it works, because most days it does. There we go. There we go. You see how today our up-down volume, I've got a 20-period moving average. Let's just get rid of that. I don't want to see it anymore. See how our up-down volume just followed price? That's traditionally how it occurs. I got a real echo going on. Can you guys hear it?
No.
Yeah, good.
Okay.
No, I hear it.
Okay. But this is how normally we see up-down volume acting with price, and that's okay. When I see this going on here, guys, like today, it doesn't make me think anything. I just see that the internals are reflecting the moves up and the moves down, and that's not unusual when we see up-down volume in the neutral area like it is. The place that it becomes significant to me And guys, I gotta tell you what, watch this, because, let's get the second one. No, let me get the other one. Here's the one I want. When we see stuff like this going on, it's okay, but I gotta tell you, there's our open, back over here. And we actually get just a little bit of uptick on the up-down volume to start with, and then cabango. It just drops off with everything else. But look how, this is the part, this is one of those days, and this works in the same way on the long trade. And that is, I see it a little bit more prevalent with the negative days, where this scenario occurs. I don't see it happening just in the reverse on the long side. But we come into a support area, and if we were to zoom out, we would find that this area down here is likely somewhat of a significant support area. And that's fine to play these areas, support areas. And if we get the retest, there's an area we could be looking at going long. This is a retest area we could be going long. This is essentially a little new low failure. And I would expect, don't know, but I would expect that we would see a tick divergence on this low. And so there's reason to be thinking, and particularly after, and let's walk through this. After we take out these prior highs, we break through, set in a new high, higher lows, we come all the way back down. And this is a little bit of a concern, guys, because we had 100% retracement that that shows me weakness. 100% retracement back down is weakness. 100% retracement back up is strength. So this is a little more weakness than I would have preferred to have seen. I would have liked to see it hold the top of these bars like we like to see in support areas, and we would expect another push. I can only conclude that that's the reason that this high failed, was due to the fact that there was enough weakness that we had a complete 100% retracement. And as I look at that, and this is why I assume that, is because look at our up-down volume. The whole time, from the time that we made our low of the day, this was continuing, the price was continuing to work higher, taking out resistance and working up. Yet up-down volume was having none of that. Every time we had a little push up, up-down volume responded really not at all. It ignored all of them. This push went on for 2 hours. 2 hours. And look at our up-down volume. Nothing happened. Okay? Now, here's what I find, guys. Here's what I find. Is in these scenarios, it is not uncommon, and I wish I could go back over, it is not uncommon for this to take out 5-minute pivot highs and change directions on our 5. It's not uncommon even to see some days where we'll fill a gap. Not usually much more than that, but we will fill a gap with a day like today. But what I want you to know and get to watch, and as I say, this happens a couple of times a month. That maybe a little more, maybe usually that much, but a couple of times a month this setup actually occurs. And when this scenario starts to develop, guys, just watch on your. Usually I'm watching my 5-minute, because these little subtle. What I want you to do is be thinking short. Now you can play your longs with the trend, but you've got to be taking them off fairly quickly, and you've got to keep your shorts, your stops rather tight. And what you're really waiting for is on the 5-minute. I find it to work a little better because these things don't turn on a dime. I just don't find them doing that. But this little breakout failure here, this little retest, this little reversal, all you're looking for is a failure to get short. And this, if you didn't do it up here, which is okay, you should be looking at it over here. Because we broke our support areas, came all the way through a couple of levels here, and then had a nice retest. And the fact that we blew up through this little pivot area, or this little consolidation area, up into here, doesn't really concern me. I've got this bigger, much bigger congestion area over here. I wish I could draw on this, but I really can't. So this bigger congestion area up here is what creates this resistance for this point at the 13:30 hour for this to roll over and go again. Now, when I see, and here's why I'm not, this is where I'm looking at. I've got a breakout failure, this 2-minute bar. I've got a breakout failure. That's a very nice bar. If we're just looking at this bar alone, nice bottoming tail, it's almost a shock bar, but close enough to even be one in the fact that, somebody was buying that maybe. This bar closes a tick or two off its high, and it immediately gets reversed. That's not normal with a bar like this. That's not the message that bar is sending us after we see this bottoming process. So this is a good failure right here, and the internals do confirm it. That's the important part. And we can trade this with some confidence, because I know that the internals, and if I were to go look at the other internals, in all likelihood, we're going to see the VIX being up, we're going to see the trend being up, the AD won't be very strong. It's even better, guys, if you can get an ADD divergence, the up-down volume, the advanced decline line diverging with you. If I can get a divergence on the up-down volume and the advanced decline, I will take these failures with a full lot or more, because I know they just work. They just work, and the fact that I took out pivots don't bother me. But the only time that really is, I get a green light for a heavy-duty short before I actually change trends, is under this scenario. So, if I didn't have up-down volume just bleeding lower and lower and lower and lower, I would never try to do this. But see, by the time the end of the day comes around, we're at negative 634,000, which in and of itself isn't all that negative. I like the days when we are down in the negative million plus. Those are negative days that just you can short every failure, every breakout failure, every time you get even a changing of the guard, man, you can short those things. But this is the whole point of this part of the up-down volume. The tool that I use is it diverging or is it confirming the strength that we're seeing? And if I'm long, I want that baby to be confirming what I'm seeing. If I'm short, and I'll actually watch it the same way, if I'm seeing up-down volume build and my prices are going lower, and they continue to go lower, and my up-down volume is not rolling over, guys, you can expect this baby's going to get turned around. It's going to get turned around at some point. So you just want to be aware of it. It doesn't mean you can't trade, the chart that you see, but I don't want to fight this up-down volume very long, because I know at some point it's going to take me, and it's going to win. So that's what I'm looking for. And I love a day like this. I I remember a day in the room, this was more than a year ago, that Kurt had taken some long trades, and they were actually working out fairly well for him. And we had moved through and taken out some pivots. And this is one of those days. We had a up-down volume that was just continuing to get weaker and weaker. And the significant part, guys, as I read this, is compared to today, if I look at what was going on today, we weren't getting bounces at all. So if I go back and look, even when this moves up during this 11 o'clock to the 1300 hour, up-down volume's not even spiking at all. Now you can see on the other chart, very good, let me go get the other chart up. I had it closed. You can see here, at least we got a little bit of reaction. The prices moved up. Up-down volume did reflect that a little bit. this is still weak enough. I'm looking to short this baby as we get into some major resistance. But on the other one, this move up, we didn't even get a peep. We didn't even get a peep out of this thing. Those are just, guys, this is just sweet. And on that day in the room, I remember telling the guys in the room, I'm shorting this, and I don't remember what contract we were shorting. And everybody thought I was a flippin' idiot. And I think I don't remember specifically, but it was no joke. It was like an 80 or almost 100 tick move out of the YM. It was a huge move. And that happens. That's not unreasonable. Look at this YM move, guys. This was 864, went to 852. This was 120 ticks from top to bottom. Now, when was the last day you saw a 100 tick move out of the YM that was tradable? Now, of course, we wouldn't have gotten all of this move. You know, we don't get them right at the top, and we don't get out at the bottom. We get the middle of it. But there was 100 from here down to here. When was the last time you guys saw a 100 tick move in the YM? It's been a long time since I've seen one, and a long time since I've seen one tradable. But this is an environment where you can get those kind of moves. Okay, let's talk about it. Questions, guys?
I just want to say I was in the room that day.
You were?
And I thought you were, because I was long, and when you put like a comment that you're gonna short the first like failure, and I'm thinking, you see the crazy, but since I know how good you are, I got out of my long for no reason, and next thing you know, this thing kept going and going, the short, and I'm thinking, my God, Neil made a lot of money here, but I wasn't with you. But you did a lesson on Vol D after that, and it became clear to me why. You're so right about those things. I remember though.
Well, and again, guys, this is a situation that I just love, when I get a day like this, guys, it's hard for me to sit in my chair, because what I find is the markets are going to move for a few hours like this, and there's a couple scenarios that typically happen, and after you watch these a little bit, you get familiar. But when you see this happening, guys, print these charts and actually keep them in a separate file, be it a hard file or electronic file. Keep these separate. Make notes, do everything that you want to do, and then kind of learn and see how these things will work. But what will happen is that usually it's the latter part of the day that this move will start. Typically, the last couple hours. Now, we actually had one of these 2 or 3 months ago that I remember setting up. And I went through the same scenario in the room. I said, guys, I'm going to short this thing, and here's what's going on. But I don't want this to break too soon. This broke the last hour. If it breaks at 2 o'clock hour, 2:30 hour, I find that's often a little early, because normally under these scenarios, we are going to go back to the low of the day or beyond by the close. And I want to catch that last hour move. That's where the big move normally comes. And I remember the last one I actually was involved with in the room that we had some discussion on. That move came a little early, and I remember talking about it, saying, "This move's early, guys. I'm worried about this." And what happened is it came back to the low of the day, and then it actually retraced about 50% near the close, for whatever reason. But when I find that they'll wait until about the last hour of the day, it's almost like there is no hope. This thing has no chance of ever recovering anything, and we're just going to the low of the day or beyond. And so these I will just trade them on pivots. I'm going to take a big lot, and a bottoming bar like this doesn't worry me. I'll actually take a little bit off on a bar like this, only because a retracement's something I can load up again on. So I'm not worried about these sort of events when I have the environment such as this happening. So I share that with you as one of those tools that you only pull out a couple times a month, like I say. But when you pull that baby out, guys, just be careful, watch them, and on a good failure, and you want to be watching really from the last 2 hours, the last 1.5 hours. Sometimes it's only 45 minutes before the end. Pick your spots, wait for a good failure, and if you wait for the 5, you usually can take a 5-minute entry on these and be just fine. You don't have to pick off the 1 minute or 2 minute top, because you never really know which one of these babies is going to go. When you get in, you almost always put break-even stops on these, or very close to. Okay, you don't have to trade them horribly tight, because if they'll break support for you, that's the key. Is when you get in, you want to see them break support. If you were to get in right here at the left of this blue line, and it didn't come in, and you got a reversal without breaking support, this would worry me. But if you were to get in up here at the very top, we wouldn't know it was the top. Where we came down and broke our pivot support, I wouldn't worry so much about this getting taken out again. Particularly even over here. I wouldn't worry about this getting taken out over here. And I would have no worries about taking a COG, a 1 minute, 2 minute entry over here, nothing over here. We're back into resistance. Everything is lined up for this baby to just rumble. So, again, guys, pick your spots, wait for a clean entry. Don't force an entry. You're going to get one, and they're going to give you several entries. You're always going to get good trades. You've heard me say this, good trades give you multiple entries. So, don't force them. Just wait for yours. Wait for the one that says, yeah, that looks good to me, and then jump on it. But guys, these things are sweet, and just carry them. If that move doesn't start too soon, if that move will start the last hour or beyond, just carry it to the end of the day. Don't worry about your pivots. Just carry that whole trade to the end of the day. These I oftentimes won't even pull much out of. I'll let them retrace. I'll let them do whatever they want. And I'll keep an eye on my internals to make sure nothing's changing. But man, if these things, if I get this kind of up-down volume, and my other internals are all lined up like this, I'm going to take a full lot, and I'm not going to peel it off in thirds. I'm going to try to carry most of this through the end, because I know that 90% of the time, I'm going back to the low of the day. And with a little bit of time, I'm going to get there. This is just one of those trades that I just don't worry much about getting into and having it not work. I really can remember very few conditions. I do remember one of these. I truthfully remember one, and only one that I recall, that didn't turn out very, very well. That's it. Jose, you got to step up to the mic.
I have a question.
Are you like in the other room?
No, it's just that I put the mic over my head, so. Now, at what point you determine that this is what you're going to be expecting, and at that point, do you add that line to one of your charts?
Actually, I don't add it, because I'm looking at this one over here, and this is the one that's down here in the bottom of my normal 2 minute trading screen, and I'm keeping an eye on this all the time, and so once I've gotten used to watching this, which I do, I watch this thing daily. It's just one of the parts of the pies that I typically watch, and I look at it every time I see prices moving. I'm still glancing at this and seeing what it's doing. So I don't put my line on. I put it on here for you guys, just so it's easy to see. But I watch it over here in the corner, and particularly early in the morning like this, I don't know that this is going to happen. But by the time lunch occurs, there's a couple of criteria I watch for. By the time lunch occurs, where are we on that? What's the absolute value of up-down volume? Again, minus 400,000 or more. I'm getting kind of excited, because I know that this is a trend down day, and I'm going to be looking for things that I can just take short. And then I watch along the way that I just make note of. And anytime I see, look at this bounce, for example, right here near the middle, starting at 9:30 up to 10 o'clock. Normally we would see up-down volume respond to that. That is a 40 tick, 50 tick, that's a 50 tick move right there. Okay, that's a fair distance on the YM. So that should have created some response from up down volume. Didn't even flinch. And then what you see is a little longer through this lunch period. You get a longer period where this is occurring. And I'm not trying to short this yet, guys, because I know that the vast majority of the time we are going to take out a pivot. This environment, particularly and it's not uncommon that we take out a pivot or two, and this thing starts to be in an uptrend. Okay, and by definition, this happens more than not that we change trends, and we'll see higher lows, and we'll see higher highs, and we'll take out a pivot. But when we're just getting no reaction to our up-down volume, then I'm looking for, and I don't care if I take out a pivot. I'm okay with taking out a pivot. All it means is I'm higher up to fall from when we finally do fall. So I don't really care how high it goes, because realistically, guys, it never really goes that high. We don't see this thing go way into the green area when this environment's going on. But it's not uncommon to see it close the gap or get near closing a gap. So I'm watching it all morning long, and particularly as we get into lunch area, and I'm really focusing as we get into that last 2 hours. And if this environment's been building all day long like this, I'm salivating the last 2 hours. I know I'm going to get a trade. Now, if the last hour or so we start seeing this thing changing, and we're seeing the up-down volume starting to reflect price change, then I'm going to be a little more cautious with it. But actually, guys, for the first little while, I actually put this line on my chart, on one of my charts that I would just pop up and look at periodically. Years ago, I did that, just to watch how it was responding, and I could see it very clearly this way. And that's really, I don't know where I picked this up, because Greg doesn't use up-down volume, Kurt doesn't use up-down volume. They really don't watch it very closely. You rarely hear them talking about it. Kurt will talk about it if I talk about it first, but he doesn't usually watch it too much or pay much attention to it. And most days you don't have to really focus a great deal of attention on it. You just want to know that it is the wind in your sails, or in this case, if you have a significant divergence, you want to know that, because either long or short, you're going to have a pretty decent trade, and that trade typically will come the last couple hours of the day. And hopefully, if luck is with us, the trading gods are smiling on us, we find that trade happening the last hour or the last 45 minutes.
Just 2 points. One is, that's a 2-minute that you have on, right?
It is.
Okay. Do you recommend 2 or 5 minutes? Because you talked
Doesn't
about
matter.
5 minutes. Okay.
Doesn't matter. You can see it on any of them.
Okay. And the second part was, and that's the reason why I asked you the question is, I mean, you already are familiar with it, but I would think that somebody like me, if I'm watching it on a different chart, and I see that line, first of all, that was going to be a smaller chart anyway, and I'm not sure we'll be able to see the length as we see it if you have on a chart that you're trading. But I would think that without that line on that chart, I'm thinking going up.
I know.
Because at some point you start seeing higher highs, higher lows. Yep. So it would make sense that at least at 2 o'clock or thereabouts, or 1 o'clock, just throw up a chart just to say, okay, this is what it looks like. Nah, it doesn't look like it's trending. I don't think it makes a difference. You can put it back on or off, or whatever chart you have. But at least it's visually, it would make sense and give you a little more of comfort if you decide to, short a uptrend, basically.
Yeah, if it works for you that way, Jose, absolutely. But what I find is, again, guys, I keep an eye on this chart down here in the bottom corner. And even as small as this is, I think if you guys don't have one of these charts, you don't have this indicator, this internal, get it on your chart somewhere. Small window, you can see what mine looks like. It isn't that big, but it still tells me, now I leave these on 5 minute all the time. I'm not moving them. 5 minutes, again, I'm just looking at trend and the number. That's sufficient. But you're going to see, and what happens is, the good part is on a day, and this is even sloppy, this is a little sloppy. On a good day, this chart will, or this line will go from the right-hand corner, or the top left-hand corner, like this. Just the opposite now. On a good trend day, this thing is going to go from either the bottom left to the top right, or the top left to the bottom right on those trend days. And this is what I'm looking at. And we'll see, even on this day, we will see prices pulling back. And then I'm just glancing. Is up-down volume confirming that pullback? Is no, yes, what's it doing? And it gives me more confidence in that thought. But that's really, that's what's going on. Is I'm just looking for the days when I get that trend day, when I get that baby pegged flat, that prices, this thing's just not responding to price advance.
Neil, the yellow line is which one?
NYSE.
Now, if you bring it all the way to the end, where you had it early, where there was that divergence between both of them, actually it was.
Now, today they stayed pretty much. They normally do stay pretty close.
No, there was one. Maybe it wasn't today. Maybe it was one of those. Where it was. The yellow one was more flat, and the other color one was actually went over and under it.
Yeah, here's the day. Look at this one. Okay, what you find in a day like today is, or what we're seeing here, when I see this going on, guys, when I've got one going in complete opposite of the other, I'm just less reluctant to get committed to a trade. It's telling me that I don't have harmony in the markets. And when we don't have harmony, what do? You get junk, you get mess. So it just tells me, be careful with the trade. And that's why I use the two of them. My bias comes from the NYSE, the yellow one.
Okay, so scroll that one a little bit more, I think, to the right. There was one section, actually, that one seems to be. Okay, actually, I think that wasn't it. There was one that we saw earlier where the yellow one was actually consistently trending up, and the other one was above it and then went below it. I mean, the yellow one was flat going up. And I was wondering if that, if you give more.
Well, no, I don't. I mean, maybe this is the example you're looking at. They're both trending the same way, essentially. They don't have to be right on top of one another because their numbers are a little bit different. My scaling over here, the numbers on the NYSE and the NASDAQ are different anyway. So we're going to get different values. But all I'm looking for is, are they acting similar? That's all I'm looking for. That's really all I'm looking for, is, are they acting similar? I don't make that scientific. In that a little divergence like this makes me pause because I'm not seeing, the continuity and whatnot. But here, what we're seeing right here, these are all close enough that essentially the market's saying the same thing. So that's all I'm looking for. Is I just don't want one going completely the other direction of the other.
Got it.
Okay. entire lesson today, guys, is this very concept. I mean, I didn't want to make any more out of this lesson today than this concept, because, guys, if it takes you some time to watch this, and again, this skill, this tool, this little trade condition, whatever you want to call it, is something that you'll have to refine and get familiar with. But I got to tell you, when you get them, you know, there's nothing sweeter than a trade that you have total confidence in. And these are the scenarios where you can do that, where you wait for the failure, and be it a breakout failure. And I don't mind the 5 minute, guys. I don't mind being on the 5 minute when I take those entries. I found that 5 minute is often, you have less problems with the 5 minute not being the right entry. You'll get some fakies. I mean, there's 2 or 3 fakies up here that you could take. I mean, you could on this breakout failure, you could jump that one, and it wouldn't have worked. You could take that topping tail, it wouldn't have worked. And the internals are all telling you they shouldn't work, but at some point they're going to stop working. The price is going to stop working, and then the setup's going to trigger. And I find if I wait for the 5 minute to tell me that, rather than try to get this thing too quickly. And again, guys, this is where you don't have to be horribly precise on your entry. And the reason being is, this I've always found, this usually does not leave me. If I get it before the breakdown, what I mean by that is when this thing breaks, usually when it'll break a base and start to go, sometimes it's hard to get on there. But if you get any retracement that gives you a lower high, and you're seeing this, take that top of that lower high. However it forms, on a 1 or a 2 or a 5, take that baby. That one's going to work. Again, you want to see in these lower time frames, even the 2, that you can take out some support, and then you start camping on a short, because you're going to get it. You're going to get it somewhere. So you don't have to pick off the top of this to make it work. You'll get a nice trade. You'll get a nice trade somewhere along the way, and you'll get your breakout failure. You'll get your little double top. You'll get your topping tail 2 minutes up underneath the base or whatever you're looking for. You'll get it if you're patient for it, and then just the guys don't peel off. Really put a stop, or once you get a couple of bars into it, you can put a break even or slightly somewhere in there. If you want to pull off a little, fine, to get yourself covered, fine, but just figure on the big money comes in holding some contracts in this environment, because your internals absolutely support this baby collapsing. You want to see this number down here. If this is diverging, guys, and this is the thing, is you really want this number down below 500,000, 600,000 when all this is occurring. If it's only down 200,000, I wouldn't be thinking I would get a lot out of this trade. So the prime scenario is these kinds of divergences with approximately 400,000 by lunch, and by mid-afternoon we're down in the negative $500,000, $600,000 or 600,000 number negative range when we're into the last part. If it's more than that, even better. But if it's only 200,000 or 300,000, be cautious with that. Your criteria is you want to be at least negative 500 or 600 in the last part of the trade, the last part of the day. And that'll get you back to the low of the day and perhaps beyond. And I would pick whatever contract looks like has the most room to go, and I would pick the one that's showing the weakness. I wouldn't pick the strong contract. I could digress here for a minute, but it always amazes me that traders will pick the strong contract to short and the weak contract to go long. And there's times when, because of void or something, that makes sense, but oftentimes that's not the case. They have a love fest with the NQ or a love fest with the ES, and they want to trade that one, and that's fine. I mean, I don't have whatever, but I just don't get it when traders are shorting an NQ when it's been completely stronger than anything else, or trying to go long, the NQs when it's the dog of the day. This doesn't make sense to me. So different scenario, different story, completely. Okay. What questions do we have about this?
You think this setup happens, what, next month?
Yeah. That's what I find.
Question.
Yes.
Obviously we want that up-down volume line to look like that.
Yeah.
What happens if, we fill the gap and we go above, and then come down? Is there,
No.
have you found that,
Yeah.
week overall?
No, usually. Now think about this. If we're going to get a gap fill is okay. I don't really care much about a gap fill, but you think about it, guys. If we're filling a gap shortly during the lunge, that means we have a balance between buying and selling, right? It's really unlikely we're going to see an up-down volume at negative 500,000 if we filled a gap. I mean, that's just not conditions that are conducive with one another. They almost can't exist. So you normally don't get a gap fill in a day like today, or I should say not a day like today, but in an environment like this, you normally will not ever see a gap fill on most of your contracts. It would be hard to get your up-down volume low enough if you did get a gap fill, but I don't really care how high it bounces per se off the bottom. It's okay with me for a good bounce off the bottom to work up high. I just don't want to see that up-down volume start to improve. So as long as it doesn't improve, the higher it goes, the better it is. Truly.
Let me ask you this question. I think I know what the answer is, because we're not going to have that minus 400 or 500,000. What happens if we gap up? So we have a gap up, and and I know it doesn't happen often, but it does happen that after a gap up, you have an immediate sell-off, where if it spends 2 hours selling off, and then we might actually have a closing of the gap, but the negative numbers aren't going to be like that, but the line looks similar today.
Well, again, you got to be careful. This is a trade, Jose, that we're looking to take the last hour. In a perfect world, the last hour of the day. Okay, so we're gonna have all day to let this thing work through those details, and even if we have a gap up, if we're gonna get a negative 500,000 on our up-down volume, it's gonna have sold off. We're gonna have filled the gap and gone way below it. So that's the thing, is if we're only sitting with a 200,000 negative up-down volume, I'm not purporting that that's a trade you want to load up on anymore. I would be very careful in that scenario, and I would trade the trade straight up, no bias. Trade your chart. If you got a long trade, take it. If you got a short trade, take it. That negative 200, for example, isn't horribly negative. It's still neutral until it's minus 100,000. I don't even consider minus 100,000 negative. To me, that's a push either way. It can go long, it can short. It's insignificant. 200,000 starts to become a little bearish. By the time you get to 4 or 5, then you have a seriously bearish day. It's not extreme. You guys have seen up-down volume at the end of the day that will go minus $1 million plus. I think the worst I ever saw was $1.6 million or $1.7 million. I only saw a couple of those.
So basically, the trend line on the up-down volume only really kicks in when Wait, that at those negative numbers.
Yeah.
And then other than that, you just look for the trend and see where it's doing. Are there like double bottoms on this too, or double tops or anything else?
Well, I don't know how the chart. I don't know what the Jose. I don't know how it's going to set up for you every time. But again, I guess the simplest way to explain this without overthinking it is that when you see this environment coming together, wait for your 5 minute. And again, ideally, you want to do it the last hour of the day. If it starts a little, and sometimes it will. It'll start. I've seen it start at like 2:30, 2:15 even. And if it starts that early, then oftentimes you'll get it'll push into the low of the day, and then you can sometimes get a bounce the last little bit. I don't like to see that sell off come too early, but. So that's your primary or your optimal environment is that this is setting up the last hour of the day. Your up-down volume is negative 500,000 or more when this is setting up, and that's what I'm looking for. And then I'm just looking for a failure. I don't care about how much support's below me, guys. I really don't, because think about it. That up-down volume is telling us a very significant message, and that is there has been no accumulation. No accumulation. That up-down volume is deteriorating all day long. Sellers are hitting it consistently. There's no real accumulation. And what you got going on is you got the city workers in their little orange shirts out there digging a hole, and 5 of them are standing around the hole looking down on that one guy that's digging the hole. Pretty soon, he's going to get tuckered out. And that's what we wait for. So, how it sets up, I'm not sure. It's going to set up differently every time. So you just watch for the bars that get you in. Traditional setups, guys, head and shoulders, breakout failures, double tops, whatever gets us in. A pullback up into a base, short at resistance, all that stuff. We're looking for all those traditional types of entries, and then just pile on one. And I say, don't get nervous that you have to pick the top of this. You do not. You do not.
You know, let's say the period from 11 o'clock to 1300 on this chart just went sideways and never went up. Like,
oh, even better.
Okay, so
you're looking.
a breakdown.
Guys. Dave, that's a good question, and I cut you off, and let me have you finish the question before I get too excited to answer that.
Well, I'm just saying then you're looking at more of a breakdown rather than some type of failure that's come at a higher level, but you still got a good target there.
You do, but actually no, you're not looking for a breakdown. Okay, guys, here's one thing I want you to do. I want you to. This is a little strong, but I want you to stop taking breakdowns and breakouts. And here's why. They fail too much. So go back and think about Jose, like you were this morning on that
Euro.
On the euro. Oops, that's not what I wanted. Hang on. Let me go get this. Because again, I know guys, I'm not trying to be a jerk about this, but too much, again, be it up on the top, be it on the bottom, doesn't really matter. The proper entry, and not so much that I want this to be greedy and that you have to extract every tick and every dollar out of the trade, but your high odds entry is on the basing pattern that just simply, Dave, as you described, and that's That would be an ideal scenario. Rather than being able to take out resistance, it just pops up into resistance and goes sideways and goes sideways. I don't want the breakout. And the reason being is these things, we don't know when it's breaking out. I mean, it'll pop up. This picture that we see right now didn't do that. But if you go back and look, they'll pop up, they'll come back in, they'll pop up, they'll come back in. And the one thing that, again, that we're trained to realize that a breakout failure is not good if you're trying to be long. They shouldn't do that. But in a consolidation, they do that. And even I find that the odds, if you go back and look and if you study them, and I did because I watched them in my trading account and I monitored all my trades, my batting average on simply breakdowns, breakouts stunk. It was 50-50 at best. In fact, it wasn't even that good. I quit taking them several years ago. I said, I'm just not taking them anymore. And this is, guys, this particular basing pattern that I'm showing you here is not in any Prestine book. I've never seen it. This is a basing pattern that I found going through a bunch of, how do I get into these darn things? I won't take a breakout, so how do I buy them? And think about it. The most powerful thing we can take is a failure. A breakout's no failure. It's just popping in and going. I mean, there's no failure there, really. Or a breakdown. I mean, yes, it's a bit of a failure because the resistance fails, the support fails. But the reality of it is, if we buy these things, and Dave, I'm not picking on you for the comment at all, but the more perfect way, if I can say it that way, the better way, the new improved version of getting into these consolidations is not a breakout or a breakdown, but a failure at resistance or a failure at support. That's where I want to be in them. And then ultimately I expect that they will break out and they will break down. But this is such a much higher odds entry than just waiting for a breakdown, because so many of those darn breakdowns pop back in on me. And then until they break the base, okay, so if you just flip this over and we're talking about a breakdown in the scenario that we were looking at over here, you know, until they actually break a base above me and take out resistance, they haven't failed. They could pop down and pop back in and pop down and pop back in a number of times, still not ever really ruin the trend or ruin the trade, but it'd be tough for us to stay in there mentally, watching these little breakdowns occur that don't work. So again, the best trade is, if you see that happening, short those suckers at resistance. Find an entry at the top, and then you know, you guys recognize a bearish consolidation. Wait for that failure at the top at resistance to get in. Don't take the breakdown.
Neil, can you put the Euro chart from this morning?
Sure.
Because I mean, I think I recognized it, and I know it came back in, but part of the issue that I was trying to count the breakdown. Like, which one was the breakdown?
Right. And I know it. I'll go to a 2-minute. All right, Jose, there's your 2-minute, and I think this is the one that you're referring to. That's your bullish consolidation after lunch.
Right. No. Yes. This was the one that actually worked very well. And attempting to count. And actually, you see it on 1 minute, I think.
Let me flip to a 1, and I'll give you back this, and I'll give it all back to you. There we go.
Right. So I see this, and I figure, okay, here is where the bullish consolidation is.
Yeah.
If it If it starts trading under here, then it's a problem.
Yeah.
So I'm like, okay, this is 1, this is 2, this is the third one. So the entry would have been red bar ignore over this bar.
Exactly. That's my entry. Now, Jose, let me take you guys one more step in this trade, okay? And that is, ideally, a good consolidation will go on for an hour, something like that. 30 minutes is fine, but 30 minutes to an hour is fine. You don't have to have 3. 3 is better. But anytime I get a breakdown failure like this one, I will take this even if it's number 2. Okay? This one is really nice. You look at this thing all spread out. And regardless of how you count your bottoms, and again, some of these won't give you perfectly 3. Some of them are going to give you 4. Some of them are going to give you 5. So understanding that, I bring my stop, and I don't take too much of what you were headed to do. I'll bring my stop usually down here and put this thing 4 or 5 ticks below this lowest bar. Because what I don't want to have happen is I don't want to get taken out by 2 ticks and have this baby rip like I know it's supposed to because I have this bullish consolidation. And guys, I've never been taken out down here that I recall. It may have happened a time or 2, but so rarely. If I give myself this much room, I just don't get taken out. If I cut this too tight, sometimes I do. And sometimes that next retest will come down by a tick or 2, take me out right to it always does, it takes us all out, right to the number, right? That's how we get out, is it takes us out right to the number and goes. So, don't worry too much if you don't get your 1, 2, 3, because maybe it's 1, 2, 3, 4 tomorrow, and maybe it's only 2 tomorrow, but do take a breakdown failure. And that blue line is my entry.
Now go to the, I think 9 o'clock,
Okay.
because that's where was the breakout failure, but it was also a bullish consolidation.
Let me go get this thing scaled. All right. So here is a very bullish consolidation.
So here I'm also sitting and going, okay, this could be 1, 2, this one didn't come. I wasn't really too happy about this one.
That's fine.
But then when I saw this one, I'm like, okay, now you'll say, take this one now.
Yep. Did you take it?
I did not. I did not because I was counting. I was looking at it. And then the other thing that I was doing, I was also marking up the chart as it was going on. And then when I saw this happen, because I took this one down, which was better. Then when I saw this, the breakout, and then I said, well, if this comes back down, then it's a failed breakout, and I'm going to short it.
Excellent.
And that's what I did. I didn't take this one, but then I took the other one when it actually came in and it failed.
Okay. Good shot. But you could have taken this. And again, the fact that this particular breakout didn't work is more indicative of just how junky and how low the volume was today, more so than this is not a quality pattern. It actually is a very quality pattern, particularly after an hour of consolidation.
If you had taken it, or if I had taken it, obviously the stop would be under here when you first take it. Now, the moment that it breaks out, I mean, I would have to bring this. I wouldn't leave the stop over here. I have to bring this over here.
Yeah. Absolutely.
If it comes all the way back and takes that, then it doesn't mean anything.
No, you're absolutely right. Fax, you were in the room yesterday when I took that oil trade?
Yes, I was.
It's almost exactly opposite of this. I mean, we were short, this one was going long. And as soon as this breaks out, my stop, your stop, every stop has to come. And I put it one tick below that bar. So my tick on this would have been 97. My tick, or my stop on this would be 97. Because as soon as I come and reverse that wide range bar up, boy, Houston, we have a problem. That should never have happened. Now, see, that's the good part. Oh, go ahead, Dave. Go ahead.
I was just curious if you would have, like, after that green bar, if you would have taken anything off, or you would have expected after that bar to be going much higher.
Yeah, here's what I normally find, guys. Is let's go through this and let's say, how would I have traded? I would have traded this thing, and this is where I wanted to get long. It's right in this area. Okay. So this gives us a long about 93. As soon as we break out, my stop comes to 97. It just has to. Now, this is why I like this trade so much more than a breakout. And that is, if we take the breakout, we're going to take this, and if we're lucky, we're going to get this at 300. But we could get it at 301 or 302, depending on how fast this moves. This is a 1 minute. This thing moved pretty darn quick. We may have got pushed up to 102, 103, I don't know. But we're not going to get in at 99. It hasn't broke out yet to speak of. Now, did we call this breakout? I'm not sure where you broke it, but the lesson here is buying the breakout gives you no room for a better than break-even exit if it fails. You're going to lose money on a breakout that fails if you're buying the breakout, period. No other way around it. Your stop's going to be below your entry. In this scenario, we don't expect it to fail, but then we don't, I mean, even if you bought it long on the breakout, you don't expect it to fail. If it did, your failure comes way ahead of your entry. So you didn't make any money to speak of, but you didn't lose any money. And that's the biggest reason I like this trade. Is I want to buy this. This is the entry I'm looking for, not the breakout, because I've got a cushion of profit that I can exit this trade, no damage, on a failure. And I can't do it if I'm buying the breakout. Now, where would I have trade this? Guys, I typically have about a 2-bar rule. That this is Neil Hamilton, this is nothing more. And this shock bar right here, okay, and let me just move this over so we can see this. Okay. So far, if that's all we're looking at, I like that bar. I don't have a problem in the world. That's a good bar. But I got to tell you what, my stop is going to come right up here as soon as this bar is complete. Two reasons is I've got basically a 2-bar rule. Is if I break the low on these consolidations like this, either short or long, it's okay to break this inside bar. It's not okay to break this second bar. If we break this second bar, the chances are it's coming back in or it's going, the trade didn't work. So I'm going to be watching it. We break this second bar, I'm going to be moving my stop in. Okay? And I usually will let this bar finish or get mostly finished to see how it's going to end. So I'm not going to keep it really super tight. But I'll often, when I see this sort of thing happening, I won't leave my stop down there all the time. Now, I did with oil yesterday because I already had half my profit out, and I thought, I'm going to let this just play out and see where it goes. If it takes me out, fine. If it doesn't, fine. I didn't want to cut the stop too tight. In this scenario, the fact that I got the shock bar, if that shock bar fails, and we haven't talked about this, if that shock bar fails, that's a huge, ugly message. And I actually will take counter trend trades against a shock bar failure. We haven't, like I said, we haven't talked a great deal about that particular
Saw
thing.
it a little bit later when it came in.
I will say that again, Jose.
I was talking to myself, sorry.
Okay, so the failure of the shock bar, guys, is a killer. This is a long setup killer to have the shock bar fail. So this would take me out. And it's not that far from my original stop anyway, but this would absolutely take me out, having this bar reversed. So, just the way this sets up, it's not too far, but even if it was farther up, this shock bar failure, this green bar failure here, this is a 1, 2, 3, 4. It didn't work. And again, that's one of the reasons I'm very, very careful how I take 1, 2, 3, 4s. You guys are 1, 2, 3s, you know that. So, anyway, that would take me out for sure, Dave. I like the way you read this, Jose. This was a huge failure. And waiting for something over here to get you in, great idea, great idea. But this could have been taken long. This could have been taken long. Because, guys, again, this is more a condition of just the poor quality of the day. Not that this isn't a good setup. This is a very good setup, particularly after almost an hour of consolidation. The longer this builds, the more support this becomes, the more potent, the more powerful it becomes. And a failure of that is more significant than a small base. Right?
That was the specific reason why I took it short.
Excellent read. Excellent read.
I thought at that moment out the entire day's consistency.
Yep, excellent read. Guys, isn't it amazing? You know, when you pull away all the other things, and you guys know I don't use trend lines. I don't use there's a moving average on here, and it's only because I had that on there for, hell, I don't even know why I even had it there. I think I was doing a lesson with somebody else, and I had my moving averages on there. Oil's the only thing I use a moving average on. It was. I did it yesterday in the room. I went back in and actually went through that trade. But, guys, isn't it good? Doesn't it feel good to look at a chart without all the other clutter and read it for what it's telling us? Maybe I'm a weirdo, but I get a charge out of that. To be able to sit here and look at the charts and read them and do the bar by bar and find these little treasures, these little subtleties that actually trigger and start. And guys, I'm not joking. You go back and look, and so often, these little events trigger the moves. And you would think, why would a failure of only, 5 ticks with darn near no volume, why would that be so significant to trigger the whole thing? And guys, I don't have a really good answer for you, because I know, we all know, there's not that many traders in here, in this red bar. There's just not that many traders in there. There's a few. But the momentum guys are piling on this. All those poor guys that bought this thing on the breakout, man, if they weren't quick, they all lost money. We didn't if we entered it right. But these little subtleties, these little things, these gems that we find in these charts are so powerful. And this is half the exciting part about trading, is learning these little subtleties that improve your odds. And guys, I went through my chart, my stuff last night from the 1st of December, and I've been a little more careful because I'm not this high. But I'm wondering if I shouldn't start being more careful more. I'm running 86% on my batting average since the 15th of November. I went back to November 15th. Technically, it was the 11th of November. When I went to the 1st of November, it dropped just under 80. But and what I did is I said, where is the peak? Where the highest I got was 86, and that was from 11th of November to today. Well, I didn't trade today, so it's still at 86. That's as good as I've ever been, guys. I've never been that high before. So I know these little things work because I've been waiting for this little stuff and just these little odds and ends.
Now, this same base with sometimes type of resistance to the left. Although it's being that it's an hour base, do you give weight to that resistance?
Well, not so much, because here's what I want to have happen, okay, is what's happening here is, you guys know the concept of transfer of supply, right?
Right.
And that's what's happening, is it can't go through, again, these are rules. These are simple rules that you have to live by. And write this one down if you haven't already. The first time into resistance or into support, what's going to happen? We're going to have a stall. We're going to have a stop. We're going to have a retrace. We're going to have a reaction the first time into resistance. It's you just count on it. It's rare that it doesn't. So it's better to count on it every time and then be surprised if it doesn't happen, which is fine. But point is, first time in, we're going to have a problem. But the longer it can hold any of this, Jose, you already know the answer to this question. The longer it can hold the base without, and gosh, again, go back, and I don't know how to, let's see if I can draw these right. No, I gotta go the other way. See, I can't even draw the dang fibs right. You look at this thing, and we had barely more than a 25% pullback on this consolidation. There's no other way that you can describe that than just super bullish. And this whole process of time is transferring that supply. It's going to be gone, and that's why this shouldn't fail.
Neil, can you go now to the, it's probably around 1 o'clock or 2 o'clock when you get the lower today?
Today?
Yes.
Right there. Right there.
Right there, okay. Now, I was watching this too, and can you give me
Control?
control?
Yep, I can. You got it.
Okay. So
There it is.
here,
Jose, can I stop you for just a second?
sure.
Dave, are you still with us?
Yeah.
Dave, I know you got to run here before long. So before you take off, geez, guys, it's already been 2 hours. I hope you guys don't mind. Don't tell anybody that we're spending 2 hours. I don't want everybody to expect this. So next time, if somebody asks, say, yeah, we have a great session or whatever, but don't tell them they're going to get 2 hours, because they're not. But Dave, before you take off, is there anything that we want to cover for you? Because I don't want you leaving with questions or things happening. Because Jose and I can stay here a little longer, because you've got a deadline.
Well, actually, I was going to ask probably what Jose is going to talk about, because what I was going to ask is this setup that happened right at 11 o'clock, like the breakdown at 10:30 failure, right? And then if that would have been a good long over those 11 o'clock bars, and my thinking is, would you have been concerned about the resistance to the left?
Well, I think what
Like
Jose is.
Sorry, if I can just add one more
Keep
thing. I probably wouldn't have been, and one of the reasons would have been the daily picture or the bigger time frames, because this, although it probably would have looked like a big topping tail at this point in the day before it ran back up, but the daily was pretty bullish.
I see.
And the bigger time frames.
Yeah, it would have been. Boy, it is. Yesterday was quite bullish. Look at that reversal. I agree with you on the daily. Would I have played this? Boy, I don't know. Potentially, if I had good support there, yes, the answer is yes. If that's what you're asking me, Dave. And the reason being is, I like this pivot here, and I like this little consolidation. We come down into a pivot, and we're holding here, and then we have a shakeout here. This little break, this is a major failure. I mean, you guys can see that. This is a failure because of, I've got, again, 2 times in, we break a prior low, but doesn't really get going. And this one doesn't even really get going. And then we finally do break, only by a hair, only to come back up in. So, you know, do I take this one, or do I wait for something up here to take? Either of the answers are okay. You know, you could have waited for something up in here. If it were to give you, we can look at a 2 minute and see if there's something on 2 minute that looks okay. But the answer is yeah, this is tradable. You just need to know that for me, and I know we did this a couple of days ago, and I got stopped out. And Dave, actually, you took the trade that I didn't take, but this one can't fail. Okay, this one just shouldn't fail. So your stop's going to be pretty darn close. It's not down here anymore. It's got to be here if this is a trade, because 2 things are happening, and that is, well, the biggest thing is this no longer is a shakeout. At best you could hope for is a double bottom, and this is too big of a stop for me to take. If I'm anticipating, if this is a trade I want to be in, this is far too big of a stop. I'm not taking this. So my choice is either pass the trade or stop it here and be prepared that maybe it takes another time or 2 before it actually takes off, like 2 days ago. So go ahead, Dave. I didn't mean to get ahead of you.
No, that was good. That's what I wanted to know.
Yeah.
See,
Go ahead.
I was watching this, and you have lower highs coming in.
Mm-hmm.
Then you have a bearish consolidation.
Mm-hmm.
You have your one attempt to go up, your second attempt to go up, and your failure right here.
Mm-hmm.
Brings you down.
Mm-hmm.
Now, just following what you were talking about earlier, which is, we know this is resistance.
Mm-hmm.
By them coming back in and reattempting to break that wall. Now, it weakened the wall.
Mm-hmm.
So, any additional attempts, because see the problem here, I was sitting here and counting failures again to see if it would go down again. And obviously I have to recognize when these failures did their job, and maybe at this point, maybe it's no longer a bearish consolidation because of the shakeout.
Correct. Now let me throw one more twist at you, okay, Jose? Let me get rid of some lines. If we look at this, and again, this is where if you can not get too married to an idea and try to stay open-minded and go through the evaluation, as you did, Jose, it's so critical. It's so critical. But not get too married to your belief system and say, okay, if they're still acting the way they should, then we're okay. But when things don't act the way they should, you have to start questioning what's different or what's going on. So if we're playing a head and shoulders, now head and shoulders change trends, right? You've got your bearish consolidation, completely agree. You get your breakdown. This is all, up until right now, everything is as it should be. And if you were to short one of these, I'd say, you just made a great trade. That's a beautiful trade, because this consolidation for a half an hour suggests that we should go much lower than we did. So as we're looking at this in real time, we're thinking, this baby's just bouncing. It can't, hardly even gets up to any resistance, and it's going to fall apart. And there's your entry, and away you go. But it doesn't work out. Now we go back and say, okay, we got a retracement. And what's the requirement for head and shoulders that we like? We want to see this come back up in and test this base. We want this neckline tested before we enter it. So this retracement is too bullish for what we're seeing. The rest of this message is all consistent, and it's all together. this double bottom didn't hold. But this new low failure is what it ended up being. This retracement is a little bearish, or a little bullish. Now, just because it came up here doesn't change our trends and doesn't necessarily mean we couldn't be looking for this to go a little bit lower. But I would have to be suspicious when we get a breakdown like this. And if I flip this to a 2-minute now, guys, I want to change it to a 2-minute, because look at this on a 2-minute. This isn't much of a breakdown. Okay? Everything's still happening. But this becomes a breakdown failure. Should never have occurred. Not this close. This is a picture that doesn't fit with the rest of everything we're looking at. And this is the retest. It also becomes your right shoulder, and so forth. So, you look at the whole picture, and this half doesn't look right anymore. It's okay to come up into here, but you don't want this kind of a failure going on. Even the fact that we came up here doesn't mean that we couldn't go lower. It makes me suspicious. It makes me worry, because look how this bar, this is a 2-minute now. Look how that bar got reversed. That's a good looking negative bar. We had volume on it. Not huge, but we had a good pickup in volume. So as I look at this, these two bars told me this baby's headed south, and it should be going south with a little bit of momentum. Let me go look at a 5 now. I don't know what the 5 looks like. I'm just curious. Oh, gotta go to 5.
Neil, I'm gonna take off. Thanks very
Yep,
much.
Dave. Hey, thank you.
And we're 4 p.m. next Tuesday, right?
We are.
Good.
Yeah, we are.
Okay, thanks a lot.
Okay, thank you,
Take care,
guys.
guys.
Hey, have a good one. Let me get rid of this real quick. Now look at your 5. This is clearly a breakdown failure on your 5. No other way around it. No other way around it. You got a good old-fashioned breakdown failure here. Doesn't really matter where you draw your lines. You've got a good old-fashioned breakdown failure. That shouldn't happen. And this little 5-minute retest over here, that's a good looking long bar.
If you put it on a 2 or a 1.
Okay? You want to go to a 1?
Yeah, 2 or 1 will do, because I think it's the same interest.
Okay. Well, let's go back to our 2. There's our 2. Or there's our 1.
This would be what I would want to get in.
Uh-huh.
Because it, to some degree, is already broken deeply into, or at least more deeply than it had before. So this is where I would think that I would try to get in.
Okay.
Here.
Nothing wrong with that. Absolutely.
Because before that, it's still premature. It's still...
Not really, Jose. And let me tell you why. It is in the time frame that you're looking. Okay? I'm going to draw a line up here and say this is somewhere in the area that Jose wants to enter. Okay? And this is why, guys, let me tell you how I do it. And this isn't that you have to do it this way. You don't have to do it this way. But let me tell you what I find really, really helps me. And that is, I want to know what the 5-minute looks like. So let's go get the 5-minute here real quick. And here's what I'm going to do. I'm just going to go do this real quick and just bring up one more chart. And I'm going to have all 3 of these up here. And let's go plug in because if you look at this 5, guys, the retest on the 5 is a very high odds entry. Very high odds entry. So this is Jose's entry. And let's move this over. Let's go over here. And we can see it on all of them. Well, on most of them. So here's the 1-minute entry that Jose likes up here. But now you're buying it way up here. this is enough of a retest. Guys, when I get a new low failure, I get a double bottom. If I get a retest bar on a 5 like this one, I'm taking it long. Now again, we're going to assume that we have decent support, we have, other things going on in line, but this is worth taking long. And this little retest is the retest I look for on the 2 or on the 5. When I get a 5, these don't fail. So I want my entry here, not up here. Actually brings us to right there. Now you don't see it on a 1 because you're still looking at this. You're thinking, I have taken out no support yet, or resistance yet, right?
Right.
And that's what gives you the pause. But looking at the 5, is there any reason that would give you pause?
No, not at all.
Yeah.
One of my problems is that I enter sometimes too low trades.
And that's because the 1 does that to you, Jose. And what I was saying, I think I didn't get all the way through that thought, is I like to look at of course you guys, 5 is my directional. I want to try to trade the 2 from the 5. I want to trade off the 2 minute when it complements the 5, or the 5 is complementing the 2. And I want to trade the 1, trade from the 1 minute when the 2 minute will complement the 1. But sometimes I don't trade off the 1 near as much as I do the 2, because I find that I get whipped around on the 1 too much, and sometimes I get in too early too. And that's why I pulled back. And so when I know there's an entry coming, and I can see it from my 5, I can see it from my 2, then I'm looking for my 1 minute to start. But if my 5's not really where it's supposed to be, and my 2's I'm sure as heck not going to take a 1 minute. So my 1 minute charts, you've seen my 1 minute charts are much smaller than my 2's or my 5's. And I do that on purpose because my focal point can't be on my 1's, because I see too many setups, too many tradable conditions on the 1 that don't exist on a 5. Does that make sense? Did I say that?
Absolutely.
Yeah.
Okay.
Can you put another 2 on?
Sure. There's our 2. Nope,
That's
nope,
5.
that's a 5. You guys gotta get the rookie off the controls. There we go, there we go. There's our 5, there's our 2, there's our 2.
So actually, my 1 entry would be over that green bar.
Over here? Yeah, your 1 entry is actually right up here. And to me, that's a little late, Jose. This is the one. This is the trigger that says this is the retest I wanted to see. Now, I got to tell you, if you would now, guys, and this is one thing that actually increases your odds. And before we go, let me go show you my oil trade, because it's textbook. If you could get a computer program to trade for you this way, it would hit home runs all the time. But the highest odds isn't this. This is still a very good odds trade. But the highest odd trade is wait for this to be broken and then buy in this area. Let it retrace to here. Now it didn't do that. And that's what you have to deal with when you let support, or in this case, when you let resistance get broken. And if you wait for retracement into the support area, sometimes you're not going to get the trade. Now, if you wait for that, you have a much higher odds of having a successful trade. So that's just one of the give and takes that has to occur with trading.
And those 2 bars actually, if you look at the 5, they came in with that. That's 5 and 2.
Say that again, Jose.
Those 2 bars actually came in with nice volume. If you look at the 5, it's the one to the left.
You take the cursor and show us what you're talking about. Okay.
That
Yeah.
And then you saw the volume start popping up on the next
Yeah.
engine. Next would have been on my engine, too, would be the one that,
Well, you know, Jose, I'm not telling you not to take that entry. If you like it, it works for you, you understand it, you find that it works for you, take the entry.
and I'll tell you what, and obviously I'm learning here. Here, I'm actually thinking I'm doing a breakout. I feel like it, and I'm not very successful in breakouts. Here, somehow, because I have already broken out, technically, I don't feel the same way.
Okay, let me ask you this. Forget everything that we just went through, okay? And clear your mind. Erase everything. The three of you. Think about this. In a downtrend, what does a breakdown failure do to us?
Catches traders.
Okay? And it also potentially changes trends. Doesn't it ruin, well, more often than not, a breakdown failure in a downtrend, in and of itself, isn't something we can take long. But it changes the odds that this trade is going to work out anymore when we get a breakdown failure in a downtrend. Right? So that's a failure in and of itself. So now we've got a breakdown failure on a 5-minute. And then we have a retest of that breakdown failure. And we trade above that retest. Is that a condition that you would trade?
Yes.
That's what happened on the 5.
Yes.
That's what happened on the 5.
And again,
We actually did a breakdown failure out of a consolidation. That should have never happened.
Yeah.
I mean, in a perfect world, in a negative trend, that breakdown failure should not occur in this space. Because this is a bearish space. We didn't, like you say, we never took in anything. This thing just went sideways, broke down, and then it didn't follow through. And that's why I hate these damn breakdowns. This happens too much. So now that we got this failure, there is my second failure. On a 5-minute time frame, there's my second failure. There it is on a 2. So while I see what you're thinking, okay, I'm playing a retest of a failure. And that changes the picture entirely.
I remember exactly what I was thinking. And
Okay.
I was saying, and I actually had typed it in, until we break this, we don't have a break in the trend. Until this is broken, the trend is not broken. I mean, that's
Correct?
just because it breaks doesn't mean it changes the trend, but it won't be broken.
You're right.
And so many times I anticipate the entry to change to break the trend, and it doesn't, and it
Okay.
comes right back in. So the way that I'm assuring or securing that I wait is I wait for it, and yes, if it broke and it pulled back, as you said, 100%, that's this one.
Yep, you'd be all over it.
100% I'll be all over it. And if I get a money bar around here somewhere, better yet. Because usually that's the way they follow. They'll shoot out, then you get like a money bar, like this bar will come back up and set up like a 1, 2, 1, 2, 3.
I agree with you. And you're right, that does become a higher odds entry. But I guess what I'm saying is with the breakdown failure, the retest makes it a tradable long.
Absolutely.
Because that retest shouldn't fail. I've got 2 failures in a row now. The breakdown is a failure, and the retest is a failure. So the picture is completely changed by the time that 5-minute bar completes.
Got it.
That's the secret and that's why I like looking at, and I like at 15s for the same reason. Do I have breakout failures on 15s? And then can I find, if that's the case, can I find entries on the 5 or the 2 that complement that? Any more questions on this one?
Nope. You know, today there was a similar setup with a retest on the 5 on oil. I took it like 50 ticks almost before it closed.
Okay. Let me, nice job. Let me change this chart real quick. I'm doing this the long way, but let me get rid of some charts. All right, let's go. Let me just do it this way. This is way quicker. This is Carol, you
Yeah.
want a 1 minute? You want a 2 minute? A
No,
5? What?
the 5 minute.
Here's a 5.
Yes, you see the bottom that it couldn't retrace. There's like, can I hold it? Wait, I don't know which one.
It's yours.
Yeah. Here we have like first a little bit like void through time, void through price. Nice. So we have 3 times failure to move down. 1, 2, 3, and the third time is 180. A strong move up. Here's your retest here, like 7, about what 7 ticks I think it was the stop. So I took it. Never stopped me. Look, it stopped me right here. This is like almost 50 ticks, and I never took any contracts before that because it doesn't make sense. Here, I'm not concerned with any of those at all. I mean, it might stop me, but so it was a very nice trade. Look at it. I took it right here. I forgot to close.
Yeah.
I mean, it was clean.
I love it.
Of course. And I wanted to ask you something else, but I don't know if you can answer me anyway. But you see the drop here?
Yeah.
I mean, that I was, it was report obviously this morning, and it moves so fast. Once I had a 30 tick slippage, I don't want to talk about it, but I took it here at 03. It filled me. It was 06 was the entry. It filled me at 03, and then it just dropped. But would you have taken it? Because you see, it's a huge stop, but
It is.
but the 100 tick did a little bear flag here. And I just thought I'm gonna take it here, and I'm gonna put my stop loss about here on the 100 tick, on a pivot of a 100 tick. Was this like a fair trade? Would you have taken something like this? Because the stop stopped me.
No, I think with your 100 tick, and you've got an objective reference point to stop out, you weren't going to leave it at the top of that bar. So, yeah, with your 100 tick, I think it makes perfect sense to try. That reversal and the news, obviously, for whatever reason.
No, but the reversal was 2 bars before that. I mean, the reversal. The news was this bar was the news. So we are like already 2 bar from the news. So I'm thinking, usually on oil, if it doesn't go one way after the news and never stops, it goes the other way. So that's why I took it on the 100 tick. I just wanted to ask you if you would do it.
No, I think it's a fine trade. And the important part is, as you said, is you had 100 tick to give you a reference. Leaving your stop at the top of that bar, to me, is crazy.
It's huge. It's like 46 or something.
It's not smart trading at all. But you had a good reference point with a very small stop. I think it was a smart trade.
All right, thanks.
Because of your stop.
Yeah, thank
But
you.
your entry down here was gorgeous. Yeah, it was a good entry.
Thanks.
Good entry. Let me show you real quickly, guys, a trade that I took yesterday on oil. And I'm only going to show it because it has to do with the trade that we took. Right. Nope. Let's keep going. Let's keep going. We'll keep going. Here we go. This is it. This is it. This is a 2 minute. And this is it. Nope. This is not it. This is it. That's better. This is it, right over here. That's the one I was looking for. Now, guys, this is what I was looking for, but because of the way, and actually I could have traded this a couple of different ways, and I chose not to on this one, only, and really I've been more cautious, as I mentioned, because of the fact that, in fact, I want to put something on here. I'm going to get ahead of myself on this one a little bit, and I don't mean to, but we'll spend more time with this on our oil lesson when we get there. But I watch the 20 period moving average on the 2 and the 5 and the 15. And that's the only time I watch a 20 period on any contract is the oil. But here was as I was watching this top develop, I saw both of these, and this on a day that I actually felt more comfortable with volume and all that stuff, I would take this bar. But yesterday I actually didn't on purpose. And I typed in the room, Jose, you probably saw it. I says, I like oil short here. I didn't take that trade. And actually, oil was short, right? It happened before this bar was setting up. So I didn't take this short. I actually waited. And I waited for it to come down. And I said to myself, I want to see it come down and test some support. I want to see it's weak enough to come this far. I don't want this darn thing to go sideways on me or something crazy because of the way these markets have been, the last few days. I said, this has to be a textbook trader. I don't want to take it. So my thought was at the time, and thank goodness it all worked out, is I have this little area of resistance up here. Now, is it perfectly right there or just up in these tails? I don't know. But I know these little bases up in here tend to be some resistance. The other thing that was happening is I had a 20 period moving average. And I find that when I normally, now it's not 100%, but normally when I go up, or for example, over here, when I go up through my 20 period, it will often pull back to the 20 and then reverse and go off the 20. Same thing coming through it. Now, it's not perfect in every situation like this, but this one went back up through the 20, came back down by a couple of ticks, and reversed. Well, had we not had all this resistance up here, this would have been a decent long setup. Well, we did, but this becomes a failure, so I won't get too much into that. What I wanted to do is I sold this before this bar completed. My entry was 30. Okay? My entry was 30. After, and this only went to 32, I sold that while this bar was yet forming. And it actually had gone to 32 and started coming back down, and that's when I sold it. And I shorted it here because I had this reference point, I had my 20 period, and I was up against resistance. And I had weakness in my retracement. So that's the three things I was looking for, and it all came together here. So this was my entry. I actually offered out at 14, which ended up being right here. And I did it because I had these bars at 14. And I didn't know if I was going to get all the way there, but I knew I was going to get there. So I figured between 30 and 14, that was fair for part of this trade. And then this thing broke. And I remember one of the guys in the room was with me on this trade. And I thought, baby, this thing's going to the low of the day. And I actually mentioned it in the room. I said, I would like this to go to 90.80, which was our low of the day. Or 90.90. We didn't get there. And I immediately brought my stop from there to here. And actually it was right at 20. And this is one that I already had some money in. I thought, if it retraces on me, what the heck? I'm going to be okay. This is a pretty big retracement. The first one didn't take me out. We actually came right back down. That one did. That one did. Now, interestingly enough, there was another short setup that came right up in here. This breakout failure. I don't remember if I was on, I think I was still in the room at the time. And I said, I don't like this breakout failure because of what just happened down here. This bar should have never been reversed. This retest shouldn't have been reversed either. We had two good attempts to go lower, and both of these failed miserably. So why do I think this one's going to work? I mean, yeah, I'm back up into resistance, but this was a strong message that something's just not working. Be it the day, be it the low volume, be it whatever. I didn't take that one on purpose because I didn't like this failure that occurred here. It ended up going a little bit, and you could have got a little bit out of this thing, but it wasn't a real good trade. It didn't ever work out. Ultimately, the darn thing went higher. So this was about the best trade in this. Well, this one would have worked over here. You know, this little consolidation, this little double bottom and whatnot. This one would have been okay to try, but this was a really good setup. This was a good retracement. Everything lined up on this one. This was a really high odds trade, and that's not really all that different than that long euro trade, Jose, that you were thinking of. We got a slightly different thing in that we don't have a breakout failure. We have a double top, or a breakdown failure. We have a double top. Normally, you wouldn't see that big bar get reversed. And when it does, you know, just like the big bar that broke out on your ES trade, that should have never come back in. And when it does, there's something really wrong. And this failure is why this could never get enough mustard on this breakout failure. Never really could travel very well, is because we already have a major failure with look at the volume, look at everything. You know, this overpowered any other thought of being short because this thing failed so miserably. So that's how you put the whole, really you put the whole piece of the pie together. It just was a poor odds trade, and you could have eked a little bit of money out of it. It just wasn't worth it given the environment that we were in. And that's the high odds trade. Come down in, test support, and I just lucky enough to get a retest of some resistance, and then you take the trade. It could have gone on without me, and I wouldn't have ever got it. So, but truly, had we had a better day with more fluid moves, I would have been taking it here. I wouldn't have necessarily had to wait for this. Okay, guys. Oh, I ruined the whole afternoon for you guys, didn't I? I can't hear you, Jose.
I said, let's make it a New Year's party.
We're not far from it. Paul, you've been real quiet today.
No, just soaking it in. I like it. I like going over that little that euro trade that Jose was talking about. That little looked like a little upside down head and shoulders.
Yep.
I didn't take it. I was stalking that trade. I didn't keep it, but I like your commentary on that.